Welcome, defeaters. The publication of the US final labor market report will be the main event of the day. Although it will be issued only during the US trade, it has already influenced the market situation. Thus, trading in the Asia-Pacific region was somewhat shaped by the expectations of the US Nonfarm Payrolls. At the end of the previous year, the stock market was in a hurry to predict a sharp and early key interest rate cut in the first quarter of 2024. Great expectations of a soft landing extended pressure on the greenback. As a result, it closed the year with a 2% decline. At present, the currency is ready to recoup some of its losses. The fact is that the macroeconomic reports issued this week in the United States unveiled labor market stability, and the data allowed the greenback to recover and consolidate against the basket of six major currencies. However, the final data on the US employment in December may considerably affect the market situation. What's more, US treasuries increased amid a possible delay in the Fed's policy changes. Thanks to such support and the status of a safe-haven currency, the US attempted to consolidate above 102.60 points early on a Friday. The US dollar index was trading upwards within the channel of 102.36 and 102.65. During the first week of the year, the US dollar has added 1.1%. The nearest technical resistance is seen at area of 103.00 and 103.20 and support at 101.77. A fast rise in the US dollar pushed back the Japanese yen, with them managed to inch up. As a result, the Japanese currency has been falling for the fourth day in a row. At the beginning of the day, it dropped by 2.5% against the US dollar and manifested the weakest weekly performance since August 2022. Nevertheless, it's still protecting the psychological level of 145 ahead of the European session. Forex traders have decided to take a wait-and-see approach to get more accurate information on the greenback. In addition, the earthquake that occurred in Japan on January 1st considerably lowered expectations of a switch to a hawkish stance by the Bank of Japan. Against this backdrop, the dollar-yen pair is still showing a bullish impulse within the range of 144.5 and 145.40. The Japanese currency is likely to go on losing value ahead of a data publication in the United States. It may slide to the support area of 142.80 and 140.70. If the US dollar continues rising, the dollar-yen pair may test the level of 146 and move towards a technical resistance at 146.5. The Australian and New Zealand dollar are suffering losses amid the greenback's recovery and cautious sentiment among traders. That the Australian dollar has been falling for the sixth consecutive session. During the Asian session, it slumped to the lowest levels in the last 3 weeks. It tested the area below an important psychological level of 67 cents. On the daily chart, the currency was trading within the range of 0.6690 and 0.6720. The market volatility slightly increased amid a jump in oil prices. By the way, Australian inflation turned out to be extremely resilient. That's why the key rate cut could be postponed to rather period to the United States. At present, such a possibility provides the Australian dollar with an insignificant support on its battle against the greenback. Today, the Australian currency may even test such support levels as 0.6670 and 0.6610. Today, the New Zealand dollar is also hovering between the resistance level of 0.6250 and the support level. And the US dollar's dynamic shapes of the currency movement. Notably, the New Zealand dollar failed to show a clear direction during the Asian trade. High volatility may allow the Kiwi to break out an important level over 62 cents. That's causing a slump to the technical support of a 0.6180. The closest resistance level is at $0.6280 and now seems to be hardly reached. We hope that the first trading week of the new year has been profitable for you and that your income has increased considerably. The recap of the Asian trade on the InstaForex TV channel is over. We wish you a last Friday and see you next time.